I know you've been waiting for this video. We have a new infrastructure bond, yeah? Before I start giving you all the juicy details about this bond, I'm very excited about those of you who follow me on Instagram, because a few months ago, I shared my best kept secret when it comes to investing in money market funds. I told you guys that ideally you should have two money market fund accounts. The first one where you use to save or invest your emergency fund, and the second one that you use as your investment fund. Why is this important? Because every time the Central Bank of Kenya floats a new infrastructure bond, a lot of you will DM me or email me and tell me, I don't have the minimum requirement of 100,000. I don't have the 500,000 or the $500,000 that I thought I would have saved by now. And so therefore you ask me, when is the government going to float the next infrastructure bond? And I keep telling you that the game is in the preparation. So when you have a second money market fund account that you use as your investment fund, what you do is that as soon as now you start putting aside 5,000, 10,000, 15,000, whichever amount that you can afford, even 1,000 or 2,000 shillings, whichever amount that you can afford. And so you start saving towards the next time there's an infrastructure bond. So for example, ideally the next infrastructure bond is going to be in March 2024. Don't quote me on this, but ideally it's going to be floated around that time. So as soon as now, if you do not have the 100,000 or the 50,000 minimum to invest in this infrastructure bond, as soon as now, you can open a money market fund account, use it, label it as your investment fund, and start saving towards investing in that infrastructure bond. And if you're wondering how you can open a money market fund account, email me and I'll hook you up. I'll open the account for you for free. And now let's get to the juicy details of this November infrastructure bond. As always, you know that every bond has special terms and conditions stipulated in the bond prospectus. This document, just like the last infrastructure bond which was floated in June, this time around we also have 3 redemption dates, and we'll have 3 redemption dates based on how much money you invest. And you know that the redemption date is when your principal amount is going to be repaid back in full by the Central Bank of Kenya. This November infrastructure bond, as always, has 2 terms and conditions that people seem not to understand, and I've received very many DMs from you on Instagram and every other social media platform. And I always tell you guys, you need to understand these 2 terms and conditions before you invest. You need to set your expectations right. And which terms and conditions are these? That is the redemption structure and the amortization. What is the redemption structure? The redemption structure answers the question, when will your principal amount be repaid? And a bond amortization is the gradual or the regular repayments of them face value or the principal that you'll invest, and the interest in the course or in the life of that bond. So simply, when you combine these two, you know, the redemption structure and the bond, simply it's the process of repaying of a debt with regular repayment. So the same way, if you went to a bank, right, and got a loan, and then the bank would give you a repayment structure where you can pay this loan back in bits, it's the same concept that the government of Kenya through Central Bank is using to repay back this loan. Because you know, a bond is a debt instrument, right? So a bond is simply the government of Kenya borrowing money from us, its citizens. It's called domestic debt. So the government of Kenya wants to fund its various projects, and so it comes to us as citizens, both those of us who live in diaspora and also those of you who live in Kenya. So it's literally borrowing money from us to finance its projects. So that's simply what a bond is. Now that you understand the meaning of these 2 conditions, let's go to the specifics of this infrastructure bond and understand these specific terms and conditions. The issuer of this bond is of course, the Republic of Kenya. The amount that the government is looking to raise from us is 50 billion. Why? What is the purpose of this bond? Is for funding of infrastructure projects in the financial year 2023-2024 budget estimates. The tenor, which is the time period, also known as the time period, is 6.5 years. The coupon rate is market determined, and as always, I'll explain the meaning of this at the end of this video. The period of sale started from 20th October 2023, and the end date, the last day that you can submit a bid is going to be the 8th of November 2023. the value date or the payment date, and this is the date by when you are supposed to have wired your money to the Central Bank of Kenya, is the 13th of November 2023. The minimum amount that you can invest in this bond is 50,000. This is awesome because previously the minimum investment amount for infrastructure bonds was 100,000 shillings. And so now investing in treasury bonds or investing in fixed income securities in general, both treasury bills and treasury bonds, is now more accessible to more Kenyans, because even for treasury bills they reduced even for treasury bills, they lowered the minimum investment amount. So it's time for all of us to start investing. And then the interest payment dates, these are the dates when you receive your interest if you invest. So as you can see, for this bond you'll be receiving your interest every May and every November. So I like to tell my coaching clients that when you invest in bonds, it's like you're assuring yourself of a paycheck from the government. So those of us who will invest in this bond, every May and every November we have a paycheck from the government. And then so the redemption date is 6 May, and so you know now what the redemption date is. This is the final day when you will receive your principal amount, is 6th May 2030. The taxation, when it comes to taxation, it reads the bond will be tax-free, as is the case for infrastructure bonds as provided for under the Income Tax Act. The redemption structure, which is why we are here, which is why we are watching this video. The redemption structure reads 10th May 2027, 50% amortization, outstanding principal amount, and then 7th May 2029, 30% of unencumbered outstanding principal amount, 6th May 2030, 100% final redemption of all outstanding amounts. And then when it comes to the amortization, it reads no partial redemption will be paid on encumbered securities on amortization dates. Any amounts up to 1 million per CDS account at amortization will be redeemed in full, except for encumbered securities. As always, we start by breaking down the jargons. What is an encumbered security? I am sure because you know investing in land or investing in real estate is one of those investment options where a lot of Kenyans know. I am sure you've had real estate investors say after a land search that the said land has encumbrances. When they say that, it means that that piece of land was used as collateral for a loan, and therefore the said piece of land cannot be transferred to a new owner. So it's the same concept in that you can use your bond investment to take a loan from a commercial bank. Now that we've read what the redemption structure and the amortization, what exactly, in simple terms, because on this channel we break down the jargon, in simple terms, what do these terms mean to you as an investor? Now, it simply means if you invest 1 million shillings or less, right? If you invest between 50,000, because that's minimum, and 1 million Kenya shillings, you'll get your full principal amount in 3.5 years. So yes, if you invest between 50,000 and 1 million shillings, this is a 3.5 year investment, or this is a 3.5 year infrastructure bond for you. In a nutshell, this is what all this jargon means. And now that you understand that, let's look at a few investor scenarios. This time round, I created an Excel sheet to show you a few investor scenarios of what would happen if somebody invested 1 million shillings, 2.5 million shillings, or even the minimum 50,000 shillings. So let's get to each. As shown on the screen, I started by doing a breakdown of the redemption date or the redemption structure, just as it was stipulated on the bond prospectus. So as it shows, 10th May 2027, there will be a 50% of outstanding principal amount or 50% of the face value. And on 7th May 2029, there will be you'll be paid 30% of your outstanding principal amount of your, or rather another word for outstanding principal amount is how much your principal is, how much money you put in. And then on 6th May 2030, that will be the 100% redemption of outstanding principal amount, or in other words, 35% of the face value. Now, and then I went down and did a breakdown of the interest payment dates. And so as you can see here on the 7th payment, the date when we will receive the 7th payment, which is, and by payment I mean the interest or the coupon that you'll receive. You know by now, if you've been watching this channel long enough, you know that for bonds you're paid twice a year, you know, every 6 months, right? And so on the 7th payment, which will happen on 10th May 2027, and that is when 3.5 years will have elapsed. On that 7th payment, people who have invested $1 million and below, if you see on the right side of the investor scenarios, people will have invested $1 million and below will get their 100% redemption. So it doesn't matter, as long as you're $1 million shillings or below, after 3.5 years, you'll get full back your $1 million shillings. Of course, you'll have received 6 payments, right? You'll have received 6 payments before 6 interest payments before you receive your principal amount. And of course, I have to remind you that after you receive your full principal, that is the end of receiving interest payments, because I know some of you think that you will receive your principal amount and still continue receiving the interest payment for 6.5 years. No, it doesn't work like that. And then let's go to still on the left on the investor scenarios. We also did another breakdown of if you invest above $1 million shillings and up to 2 million, and so these I give a specific example of somebody who will bid for exactly 2 million. What would happen is that on the 7th payment, which is 10th May 2027, which is 3.5 years later, this person would receive 50% redemption. To mean, if just using our example of someone who bids for 2 million, this person would receive $1 million shillings back. Yeah, so $1 million shillings of their principal is going to be paid back. And then for the same investor, after 5.5 years, which is going to be 7th May 2029, which would be 7th May 2029, they would receive the 100% redemption, which means they will now receive the other $1 million back. And so $1 million plus $1 million is equals to 2 million. So that person will be now fully paid back. But if there is someone who is going to invest who is going to bid for more than 2 million, right? And a practical example I used here is for somebody who is going to bid for 2.5 million. So what would happen in this for this person's scenario is they will get a 50% redemption, which is equal to 1,250,000, which is going to be paid back at the 3.5 year period. And then the same person, after the 5.5 years, they will receive another 30% of their outstanding principal amount, and this equals to 375,000. And then finally, after 6.5 years, this investor would receive the now 100% redemption, and which is equal to 875,000. So 875,000 is how much money CBK would still be holding for this specific investor. So yeah, so this is a good breakdown to show you. So I'm sure with this Excel sheet you can plug in yourself. So if you're between 50,000 and $1 million, you can see it's a good breakdown of what to expect. If you're between $1 million up to 2 million, plug yourself. If you're above 2 million, plug yourself on the right side. So that's it. So that's a practical investor scenario that I thought would be nice to add to this video, which is an upgrade from all the other videos, so that you're able to plug in the numbers for yourself and you're able to calculate and to know when you'll receive your full principal amount and when you'll stop receiving your interest payments. Let's look at 3 practical examples of people who will bid between 50,000 and $1 million shillings. So if you invest the minimum 50,000 and then use 20,000 of your bond as collateral for a loan, the 20,000 shillings will be encumbered. If you won't have paid back your loan by 10th May 2027, only 30,000 will be paid back. The 20,000 will be repaid either on 7th May 2029 or during the final redemption date in 2030, and that of course depends on when you'll pay back the loan. If you don't get a loan against your bond, your 50,000 will be fully paid on 10th May 2027. That will also be the end of you receiving interest payments. If you invest 100,000, which was the previous minimum investment for infrastructure bonds, then use 20,000 of your bond as collateral for a loan, the 20,000 will be encumbered. If you won't have paid back your loan by 10th May 2027, only 80,000 will be paid back. The 20,000 will be paid either on 7th May 2029 or during the final redemption date in 2030, depending on when you'll pay the loan. If you don't get a loan against your bond, your 100,000 will be fully paid on 10th May 2027, and that will also be the end of receiving your interest payments. If you invest $1 million, then use 20% of your bond as collateral. The 200,000 will be encumbered. If you won't have paid back your loan by 10th May 2027, only the 800,000 will be paid back. The 200,000 will be paid either on 7th May 2029 or during the final redemption date, which is in 2030. Depending on when you'll pay depending on when you'll pay the loan. If you don't get a loan against your bond, your a million shillings will be fully paid on 10th May 2027. That will also be the end of you receiving interest payments. As always, people always wonder, is receiving your principal amount back, is receiving your principal amount earlier in 3.5 years as opposed to 6.5 years, a good thing or a bad thing? It's a good thing for a few reasons. Reason number one, it's great for us retail investors, and retail investors are those of us who invest a million shillings or less, because you get to get back your money in 3.5 years as opposed to waiting for 6.5 years, right? And so when you receive back your money in 3.5 years, you can either spend that money, which I do not recommend. I recommend that when you get back your principal amount or your interest coupon payments, reinvest that money, unless you're already 17, your retirement age, and therefore it's time for you to start consuming your wealth. But if you're in the wealth building stage, right, where it's almost all of us between 20 and all the way to 60, then you should be reinvesting that money. So you either, when you get your money back in 3.5 years, you either spend that money or reinvest in other high yielding investments. Reason number two why it's good to get your money back earlier is because it lowers your inflation risk. You do know that bonds are not inflation adjusted, right? To mean that if, for example, for this bond, we get a coupon rate of 17%, right? And then let's say in the next 3.5 years, or even in the next 6.5 years, the inflation rate shoots like 20%. There's no way the Central Bank of Kenya will come back to us, and tell us, hey, now that the inflation has risen to 20%, let's adjust the coupon rates or the interest payments for your bond. No, you'll get stuck with that coupon payment all the way to the end of, all the way to the maturity of that bond. Of course, you have an option, right, that you can sell your bond in the secondary market through a stockbroker, and nowadays the Dow CSD app allows us to do that seamlessly. And then the last bit is that the rising interest rates are still a risk, right? The current rising interest rate are still a very big risk to your investments, because we usually say that higher interest rates is equals to lower bond prices. So the rising interest rate are risk to your bond investments. In other words, interest rates are expected to rise in line with rising inflation. So investors are wary of the risk rising interest rates pose to the market value of bond. Rising interest rates affect the market value of bonds, especially bonds with longer maturities. So it's nice to get your money back in 3.5 years as opposed to waiting for 6.5 years. So being able to cash in part of your principal sooner gives you the ability to invest in other high yielding instruments. Now, what about those of us who are not retail investors and therefore are going to invest more than a million shillings? So if you're going to invest more than a million shillings, just like I showed you the Excel sheet breakdown, so 50% of your outstanding principal amount will be paid on 10th May 2027, 30% of your outstanding principal amount is going to be paid on 7th May 2029, and the rest of your outstanding principal amount is going to be paid on 6th May 2030. So so that being said, now let me read for you practical examples of people who are going to invest a million shillings and above. If you invest a million shillings and 50,000 and then use your 150,000 of your bond as collateral for a loan, the 150,000 will be encumbered. On 10th May 2027, you receive 50% of your unencumbered outstanding principal amount, which is now in this case is 450,000. On 7th May 2029, you receive the remaining 450,000, but won't get the encumbered 150,000. You'll get the 150,000 on the final redemption date. If you invest 5 million and then use a million of your bond as collateral for a loan, the a million will be encumbered. On 10th May 2027, you'll receive 50% of your unencumbered amount, which is now 2 million. On 7th May 2029, you'll receive 30% of your unencumbered outstanding principal amount, which is 600,000. You receive the rest on the final redemption date, 6 May 2030. Of course, you have to note that the above two examples depend on when you'll pay back the loan. And now let's talk about the frequently asked questions that were submitted about this infrastructure bond. The first one that I promised to answer is, what does a market determined coupon rate mean? I like to use a practical example where I say, imagine there's a shopkeeper in your neighborhood, right, who sells bread. And let's say you have 3 neighbors, yes? And so one morning, one neighbor wakes up and goes to this shop and asks the shopkeeper, how much are you going to sell for me this bread? And the shopkeeper says, I'm going to sell for you this bread at 60 shillings. The next neighbor goes and asks, how much are you going to sell me this bread? The shopkeeper says 70 shillings. You go to buy the same bread, the shopkeeper tells you they're going to sell you that same bread at 100 shillings. And so the other neighbor goes, asks, how much are you going to sell me this bread? He's told 50 shillings. And so at the end of the day, what will the shopkeeper do in order to determine what is the real price of this bread? The shopkeeper is going to take the 50 shillings they offered you, 60 shillings they offered the other neighbor, 70 shillings they offered the third neighbor, and the 100 shillings they offered the fourth person. So you're going to add the 4 of them and then do an average in order to determine what is the real price of this bread. And so let's say the average is going to be around 75 or 85. I'm just randomly guessing a number. So that is what it means to that is literally the same concept the Central Bank of Kenya uses when they say that a bond's coupon rate is going to be market determined. And so literally that is to show you that the coupon rate is going to be determined through the auction process when each of us as investors submit our bids. And so right now, I or anyone else cannot tell you what is going to be the coupon rate or the interest rate for this bond. We will all know the average for this bond, the average coupon rate for this bond when the period of sale ends. Central Bank of Kenya will communicate to each of us through either SMS, through their social media pages, website, email. All of us will know, right? And then obviously the coupon rate is likely to be higher, and I've used the word likely so that you don't misquote me, right? The coupon rate is likely to be higher than the last infrastructure bond, which was in June, because for that bond they gave us a coupon rate of 15.837%. So this time round we are hoping for between 17 and 18%, which will be a very lucrative bond. As always, I always advise you, if you are a retail investor, if you are a small investor like me, please, when you're asked what is the coupon rate, bid average, right? Put 0. 0 is average, because if you do this, then it means that your bid is not going to be rejected. If you go there and put in 20%, 30%, 18%, then it's very highly likely that your bid is going to be rejected. Rather, you're at risk of your bid being rejected. And I always say, the only scenario where you should consider submitting a competitive bid is if you're an institutional investor. That means you're a bank or a pension fund, or you're a very high net worth individual. In that case, you should call me. Or if you're a very high net worth individual who has 50 million and above, because high net worth individuals usually have access to private advisors or private asset managers, and in that case those financial analysts are able to do the math and determine how much is it likely is it likely to be the coupon rate. So yes, if you're a retail investor, stay safe. Bid average. The other question, if you can't invest now, will the bond be reopened in future? The bond prospectus we saw earlier says it may be reopened in future. That's exactly what it said. It may be reopened in future, and this usually at the 100% sole discretion of the Central Bank of Kenya. So we do not know. And either way, if you miss the primary, if you don't have the money now and you've missed the primary sale, you can always buy the same bond in the secondary market using a stockbroker. You can access that market on the Dow CSD platform, and I should do a video very soon on how to buy and sell bonds in the secondary market using the Dow CSD. Subscribe if you want me to encourage me, right, to create this video. Also give this video a thumbs up, so that this same infrastructure bond, the November infrastructure bond, will begin trading on the secondary market on 13th November 2023. Yes, 2023. The other very common question is, how do we bid for this infrastructure bond? You know, I'm the galley for practical. You know, I take you to the practical bid. So let us submit. I haven't submitted my bid. I decided I'm not going to submit my bid until I'm not going to submit my bid until I do this video. So let's submit a bid together. So the first thing you need to do is to log in to your Dow CSD app. But there are two ways you can submit a bid, either through the Dow CSD app or through the old method, the CBK TMD, which is stand for Treasury Mobile Direct method, by simply dialing *866#. And we'll also do that in this video. But for now, let's use the Dow CSD method. So you log in The first page you'll see is your portfolio. So then next you're supposed to click buy or sell, and then click securities, and then scroll. As you scroll there, as actually from my screen you can see on my screen the first bond on the list is the IFB 2023 6.5, which is the bond that we've been talking about throughout this video. So we'll click create bid. Okay, and then as I said, please, if you're not a high net worth individual or an institutional investor, click non-competitive. Non-competitive is to mean you want the Central Bank of Kenya to give you the average coupon after the committee has sat down and done the average of all the bids that are going to be submitted. Face value is it's simply asking you how much money do you want to invest. So for this example, I'm going to use 100,000. But then you can submit as many bids as you want. So in this case, I'm going to use 100,000. Account number. Each of us has a unique account number, and as you can see now our account numbers changed. Long time ago, before they launched the DAO CSD, our account numbers were they did not have that -004. Now everyone's account number has now that -004. So when you want to do the transfer of your money, because that's another question a lot of you have asked me, if you want to wire your money from your bank to the Central Bank of Kenya, you have to provide to your bank an account number that has -004. But let's continue to placing this bid. Placing agent, this part is optional, so you can leave it as none. I usually leave it as none. Source of funds, you can either choose local or offshore, by the way. So if you choose offshore, it means that you're going to wire your money from, if you're like a Kenyan, like living in the diaspora, you can wire your money from the US, from Dubai, you know, anywhere. Like I can wire, if I chose offshore, I can wire my money from my Dubai bank account. But for today, because my money is my money that I'm planning to invest in this bond is in my Kenyan bank account, I'm going to choose local. So if you are Kenyan living in the diaspora, I recently learned that you actually do not have to wire your money to your Kenyan bank account, and then after that wire that money to Central Bank. You can wire that money directly from your diaspora bank account to Central Bank of Kenya. Yes, just do the conversion rate and make sure you send the right amount. And then I think you can contact Central Bank of Kenya and ask them what is your exchange rate, so that you don't send less money. And then specific source of funds. You have different options: maturing, treasury bill, or treasury bond. So if you have a treasury bill or treasury bond that is maturing, you can use that amount of money to invest in this bond, right? Yeah, to invest in this bond. And then others, specify. So for me, I'll choose salary, and then you have to click. If you choose others, just like I explained in my previous video, I have a whole video where I've explained how to submit bids for treasury bills and treasury bonds. Go back and watch it. I'll put it in the description box. So we'll choose salary, and then we are going to accept the legal terms. And then we are going to click place bid, bid placement confirmation. All those details are mine, and then place bid. Your bid was placed successfully. Close. So if we bid close, you can see on my bids part, when you go to bids, you can see IFB 1/2023/6.5, which is the bond that we're talking about. Yeah, so sending to CSD. So all I have to do is now wait. I'll either receive a text message or I receive an email. I'll update you guys on my Instagram. So follow me on Instagram. The second way that you can submit a bid for this bond, that is if your DAO CSD is not working, is using the old method, because the old method, which is the CBK TMD, was not discontinued. So you can still dial *866# and submit your bid for this bond. Yes, you can do that. And so the reason it wasn't discontinued is because CBK recognizes that there are people who do not have smartphones, and so therefore not everyone has access to DAO CSD. It can also be maybe you have a technical issue with your DAO CSD, and therefore you choose to use this other simple method. If you do not want to invest directly, which is the only method that I recommend, if you do not want to invest directly through the Central Bank of Kenya, so investing directly through the Central Bank of Kenya is also known as investing through the primary market. If you don't want to invest through the primary market through the Central Bank of Kenya, through the two methods, DAO CSD or the *866#, you can also invest through other investment platforms such as commercial banks, investment banks, licensed investment advisors, through stockbrokers in Kenya, non-bank financial institutions. But as always, I keep reminding you, there's no free lunch in finance, and therefore if somebody is investing on your behalf, if somebody is investing in this bond on your behalf, they will charge you a management fee, and this management fee most of the time is usually a portion of your investment capital. And that is why I always recommend follow the simple method that I've shown you, follow the instructions and invest directly through the Central Bank of Kenya. I always say that smart investors break the chain of investing through intermediaries. Yes. Another question I get a lot is, why should you consider investing in this infrastructure bond? Many reasons. Passive income. So interest for infrastructure bonds or all bonds in general in Kenya, you get paid every 6 months. Your interest payments or the coupon payments are paid every 6 months, and that is passive income. You know, if you've been following me enough, you know that there are 2 types of incomes, right? Active income. So active income is the kind of income where you add through your 9-to-5 job, for example, and through your 9-to-5 job or any job that you have, or even if you're running your own business, you sell your time for money. So you have to show up in order for you to get paid. And most of us, it's like you're paid, you show up for X number of hours, you actually get compensated for only those number of hours. But if you invest in such a bond, for example, you earn passive income. Reason number 2 why you should consider investing is you get relatively higher returns from this investment. So as I said, we're expecting the coupon rate for this bond to be around 17% or high. I don't know, right? So do not quote me and say, Agatha said that you're going to get a coupon rate of 17% or higher. No, as I said, this is market determined. It's going to be determined when people submit their bids, or when investors like you and I submit our bids. Another reason is this infrastructure bond is tax exempt. Right now in Kenya, everyone is complaining about KRA and how many taxes are there. So this is an opportunity for you to invest tax-free. Another thing, it's a risk-free investment in that the repayment of this bond is pegged to the credit of the Central Bank of Kenya. So it is what it is. And then you have an opportunity to sell your bond in the secondary market. So for example, if you buy your bond today and 2 years later you feel that you want your principal back, you can sell the same bond on the secondary market using a stockbroker. But I will stop here and give a little advice. I always tell people that if 100,000 or 50,000 or 500,000 is the only money you have between you and being broke, don't put all that money in the bond, right? Or if the 50,000 is the amount of money that you know you have, and you know that 3 months down the line you'll need that money to pay your rent, or you'll need money to pay school fees for your children, or you'll need that money to run your day-to-day life, don't put that money in an infrastructure bond, because an infrastructure bond is a long-term investment. There are other investment options for you. If you only have 50,000 between you and brokenness, put that money in a money market fund, okay? And then save towards accumulating the amount of money it requires in order for you to invest in a bond. Another reason that is nice to invest in this infrastructure bond is that you can use your bond to access a loan facility from a bank. I already explained the whole scenario of encumbered bonds and what would happen if you use a part or the full amount that you invest to access a loan facility from a commercial bank. Another very common question is that, can top-ups be done after submission of initial purchase? Somebody is asking, can you top up in the same bond? So first of all, I said you can submit as many bids as you want before the 8th of November. Yeah, so you can submit as many bids as you want. So that's that. And then about top-ups. So usually you can't top up the same bond after this period of sale ends. So the period of sale ends on 8th November 2023, right? So after that, you can't top up the same bond. The only way you can top up the same bond is if that bond is reopened in future. And that future we do not know, whether it's a week from now, a month from now, a year from now. That is, as I said, at the sole discretion of the Central Bank of Kenya. So that is the only way. If the bond is reopened after the 8th, that is the only way that you are able to top up the same bond. Otherwise, if it's not reopened, ikienda imeenda. Okay. Another very common question is, how do you make payments to Central Bank of Kenya after your bid is successful? Now, for this question, I am committing to creating another short video to show you my process of how I'm going to make this payment to Central Bank of Kenya. And I'm saying this because this is one of those things where a lot of people are not sure, because some banks still do not have still do not have the capacity to do RTGS payments or online payments from those banks to Central Bank of Kenya. Because for a lot of you, you're asking me this question in terms of how do you make your payment to Central Bank of Kenya at the comfort of your home. So I can tell you that if you do not want to have issues with your payment, it's best if you go physically. That is, if you're available. It's best if you go physically to your bank and make this payment. Otherwise, there are banks that I know that have the capacity to make these payments, that is such as Standard Chartered, and I think also KCB also have the capacity to make these payments. Now, but the most important information I can provide for you during this video is that you need two numbers when making your payment, when you're making your payment from your bank to Central Bank of Kenya. A reference number, and this reference number is a unique number that is going to be provided to each one of us after our bid is successful. So it's either going to be, you're going either to receive this reference number as a text message or in email. You're going to receive this from Dow CSD email. You're going to receive this number. So to make your payment from your bank to Central Bank of Kenya, you need this reference number that is unique to you. It's going to be sent to you after the period of sale ends. I repeat, you also need your CDS account number. Now, as I said previously, all our CDS account numbers changed. After Dow CSD was launched, all our CSD or CDS, you can use it interchangeably, those our CSD account numbers changed. And so now everyone, if for example, if previously your CDS account number was 170170, now all our CDS account numbers are, for example, using the same example, 170170-004. 03004. Okay, so these two numbers, your CDS account number and your reference number, these are the two numbers that you should call your bank or you should contact your bank. Provide for them these two unique numbers, and so they'll be able to use these two numbers to do a direct debit on your behalf. So that's the information that I can provide for you now based on me calling the Dow CSD to ask them, because it's a very common question. I will try. So after my bid this coming week or the week after, I'll try to do a video of how my process of making an RTGS transfer is going to be, if it's going to be successful. And then somebody else asked about redemption dates, right? About redemption dates, right? Will the coupon rate be for the original amount invested, or will it be will the coupon rate be calculated based on the balance after partial redemption? So this person is imagining, let's say they put a bid for 2 million shillings, and then after 3.5 years, let's say they due to the partial redemption, they get back their 1 million. So this person is asking, if for example the coupon rate is going to be 18%, after I get back my 1 million shillings, will Central Bank of Kenya calculate my coupon rate based on the original 2 million, or will now the Central Bank of Kenya calculate my coupon rate based on now the only 1 million remaining with them, remaining with them? And so the answer is Central Bank of Kenya will calculate your coupon rate based on the principal amount outstanding, that is the balance that is remaining with them. Why? Remember very clearly that a bond is a loan, right? It's loaning money to the government of Kenya. And so obviously the government of Kenya is going to calculate the coupon rate based on the balance, because at the end of the day, the reason why the government or Central Bank of Kenya provides this redemption structure and amortization is because they want to reduce their debt burden, right? And that's why they are paying you part of it in 3.5 years, part of it in 5.5 years, and another part in 6.5 years. Therefore, there is no way that they will continue calculating your coupon rate based on the original principal amount. No, then it will not be logical, because remember, the sole reason as why they provide redemption structure and amortization is to reduce their debt burden. And the debt burden is both from the interest that they owe you and also from your outstanding principal amount. Okay, now you know. And again, this is also a very good reminder that there's no free lunch in finance. Okay, there's no free lunch. There's no way the Central Bank of Kenya is going to calculate your interest from the original running balance. That's it for today. Do you have other questions? Please leave them in the comment section, because I've realized every time I do these videos, we have a beautiful community of wealth strivers who will answer your questions. So even if I am bombarded with work and I'm not able to answer all your questions, which I always do, somebody, a wealth striver who has experience, who is going to answer those questions. So leave them in the comment section. I'll answer them, or somebody will answer them. And As I said, at the same time, after watching this video, if you feel that you still need extra help, right? For example, one thing that I've noticed that people really need help with is determining how much should they actually put into this bond, because a lot of you are making the mistake of investing in long-term a lot of you are making the mistake of investing in your emergency fund, or the 50,000 or the 100,000 you have between you and brokenness, or even the 2 million that you have between you and brokenness. You're making that mistake of investing it in this long-term investment. So if you still need extra help, for example, to determine how much money you should invest or how much you should put in based on your current financial circumstances, I'll leave a link, a pick my brain link in the comment section. Thank you for always being here. Please like this video. Please share it with someone. Please subscribe. Let's grow the Wealth Tribe community. And also, by liking this video, it helps YouTube distribute it to more people, and it also gives me the motivation I need to keep creating good content for you guys. Thank you, and bye-bye.